Welcome back to Money Exchange. Joining me from the London Stock Exchange to chat about the euro and the pound is Zachary Latif from TLG Capital. Good morning, Zachary, and thanks very much for your time. We saw the euro turn on its heels this week after the inflation data came out, and we're looking like we're heading back lower. What are your thoughts on the medium-term direction on the euro, and are we headed back down into Christmas, do you think, much lower?
I think that the euro, in line with most other currencies, is going to have a weakening trend against the dollar. However, I think we have to also be very cautious about one-month data. I mean, the Eurozone, we will have to look at a longer inflation horizon before we can speculate about what direction QE and the quantitative stimulus program by the ECB is actually going to take. So I think while we are going to have a weakening direction, again, we still need more inflation data.
So what probability do you give the chances of the ECB injecting some more stimulus before the end of the year? Because really the euro has fallen now because of that expectation, correct?
Exactly, and I think the probability is going to be very high. We aren't looking at a normalized inflation horizon for the Eurozone until 2017. Draghi's comments have basically propped up QE as well. So in all likelihood, the Eurozone is going to be heading for a much weaker movement against the dollar, not necessarily against the pound, but it's definitely going to see an expansion and extension of quantitative easing by the ECB.
I read a statement this week from Barclays saying that they thought the euro was going to significantly move lower. In fact, by the end of next year, they have a price target of 95. Is that, do you think, a little bit pessimistic? Or where's your price target this time next year, euro, US dollar?
My opinion is that that's actually not pessimistic. I think that would actually be a very reasonable expectation, and I would actually agree with that, because we are actually not necessarily seeing euro weakening. We're also seeing dollar strengthening. So it's two sides of the same coin pushing in the same direction. And hence, yes, the prospects for the euro against the dollar are going to be very dismal, but then the same could be said for the sterling against the dollar as well. So it's not necessarily only a euro story. Of course, we are seeing in Europe and the UK, because of increased expectation of quantitative stimulus, that's also going to be an additional weakening factor. But let's not forget that over the next year, the likelihood of the Fed starting to raise rates and beginning a tightening cycle is very, very high. So I would actually be in agreement with what Barclays is forecasting for euro dollar.
Okay, Zachary, we've got some emails that have come in from the viewers, and the first question is from Joyce, and she asks, can you please tell me if you think the European stock market will do the same as the US stock market did with all this stimulus from the European Central Bank?
My opinion is that while I am bearish on the euro against the dollar, I am very, very bullish on where European equity markets are going to go. I think that is going to be a scope for investing, especially in Europe and the UK, because with quantitative stimulus only increasing, I mean, what is amazing right now is that the discussion we're having is about whether to expand and extend the program. So in a way, we are going to see a very bullish prospect for 2016. And let's not forget as well that if we have dollar strengthening, that's going to hit EM economies. And the Eurozone is in a current account surplus. So after the dollar, the Eurozone is going to be the flight to safety mechanism for a lot of foreign investors. So yes, in answer to Joyce's question, I would be very bullish on European equity markets over the next year.
Okay, our next question is from Ross, and he asks, if the UK votes to leave the EU, what will happen to the pound? Interesting question.
I think, personally, I think the chances of leaving the EU are rather low, but if it does, let's also remember the prospects for the pound right now aren't very strong. So the pound is anyway on a weakening cycle. It's been depreciating against the dollar over the last month or so. If there were to be an exit vote, it would actually cause a severe weakening effect on the pound itself and on the prospects of the UK economy as well. We've got to remember a substantial amount of trade is between Britain and the Eurozone.
Zachary, as always, thanks so much for your time, and have a great day there in London.
Thank you, Andrew.
After the break, I'll share with you my big currency mover, and I'll give you the chance to win $500 cash. Don't go away.